All right, let's get right into it. We're taking a hard look at the crypto market in early 2026, and honestly, it feels like we're standing at a massive crossroads. We've had this incredible run-up, followed by a drop that, let's be real, has shaken a lot of people out. The air is just thick with fear right now. But you know, as any seasoned investor will tell you, moments just like this are often where the real opportunities are hiding.
So, the first thing we absolutely have to get our heads around is the psychology of the market. What's everyone feeling? Well, in short, sentiment has completely fallen off a cliff. And it's left everyone asking the exact same question. Is this just a little breather before the next huge leg up? Or is the party officially over?
And wow, this really shows you just how deep that fear runs. What you're looking at is the Crypto Fear and Greed Index. And right now, it's sitting at a 9. Not 90, a 9 out of 100. That is deep, deep in extreme fear territory. Now, the interesting thing here is that historically, these moments of total panic can be fantastic times to accumulate for the long term. But man, it definitely does not feel that way when you're living through it.
And here it is. This is the core dilemma facing every single person in the market. Bitcoin went on this absolute tear, hitting a high of around $126,000 back in 2025. But since then, it's been chopped down by 46%. So which is it? Is this a healthy, much-needed correction that just cleans out the system before the next big move? Or is this little bounce we're seeing just a trap to suck in the last bit of money before the floor really falls out?
This leads us right to this classic, kind of grim Wall Street term, the dead cat bounce. The idea is that if you drop even a dead cat from high enough, it'll bounce a little bit. In market terms, it's that brief, hopeful recovery that fools everyone into thinking the worst is over, right before the price starts plummeting again. It creates a bull trap, and that right there, that is the single biggest fear haunting investors today.
So, how in the world do you navigate this kind of uncertainty? Well, trying to make one single perfect prediction is basically a fool's game. A much smarter approach is to map out the different ways this could all play out. Let's build a framework to understand what might happen next.
So we're going to break this down into 3 distinct scenarios. First, you've got the bear case, where, the pain just keeps on coming. Then there's the base case, which is more of a slow, grinding recovery. And finally, the bull case, where the rocket boosters reignite. Look, this isn't about guessing which one will be right. It's about being prepared for any of them.
Okay, so this table really lays it all out. Let's start with the bear scenario. In this world, we could see Bitcoin drift all the way down to a cycle bottom, maybe somewhere around $38,000 by year end. Yikes. The base case, though, that suggests we kind of chop around and slowly recover into that 85K to 110K range, building a new foundation. And then, you've got the bull case. This is a powerful rally that smashes through the old highs and pushes up towards $150, maybe even $160,000. I mean, we're talking about 3 completely different worlds here.
Now, not all these scenarios are equally likely. Based on the current data, that base scenario, the moderate grinding recovery, is seen as the most probable outcome, with about a 45% chance. But here's the kicker. Look at the bear scenario. At 35%, that is still a very significant risk. The explosive bull run, that's actually seen as the least likely at just 20%. So the takeaway here is crucial. The market is leaning towards a recovery, but the risk of a true bear market is still uncomfortably high.
Okay, so with these 3 paths in mind, what are the signposts? What are the clues we should be watching for that tell us which of these futures is actually starting to play out?
This breaks down the key drivers perfectly. On one side, for the bull case to really take off, we need to see things like big money flowing back into the Bitcoin ETFs, the Federal Reserve starting to cut interest rates, or some game-changing news, like a country's sovereign wealth fund announcing they're buying Bitcoin. But on the flip side, the things that could trigger that bear case are a global recession, a really harsh regulatory crackdown from governments, or some kind of crisis with a major stablecoin. These are the battle lines.
All right, knowing the possibilities is one thing, but actually positioning your portfolio for them, that's a whole different ballgame. So let's talk strategy. How can you actually prepare for such a wide range of outcomes?
Okay, so if you're a more conservative investor, your #1 priority is protecting your capital. This portfolio reflects that. You've got a really big slice, maybe 25 to 35% sitting in stablecoins. Think of this as cash. It acts as a buffer, it dampens the crazy volatility, and it gives you a ton of dry powder to buy the dips if they come.
Now, the moderate approach is all about finding that balance.
Here, your stablecoin position shrinks to about 15 or 20%, which frees up more capital to put into a more diversified bucket of altcoins. This is for someone who really wants to capture more of the upside, but still wants to keep a pretty decent defensive position just in case.
And then, of course, you've got the aggressive investor. This is all about maximizing those potential returns. Here, the allocation to high potential, maybe riskier altcoins swells up to 35 or 40%, while that stablecoin safety net shrinks way down. This portfolio is designed to absolutely fly in a bull market, but believe me, it will feel the most pain if that bear scenario plays out. You know, regardless of your risk profile, trying to perfectly time the bottom is pretty much impossible. This is where a tiered buying strategy, sometimes called dollar-cost averaging, is just such a powerful tool. The idea is simple. You put some of your cash to work now at current prices, but you hold some back. If the market drops 10 or 15%, you buy some more. If we get a really nasty drop, say 25 or 30%, that's when you deploy your final bit of cash. It's a system that takes all the emotion out of buying.
Now, beyond Bitcoin and Ethereum, a ton of the potential growth, and let's be honest, the risk, is in the world of altcoins. So let's zoom in a bit and look at some of the areas that are showing real promise for 2026.
Right now, there are three key stories or narratives that are getting a lot of traction. First is real-world assets, or RWA. This is all about tokenizing things from the real world, like real estate or government bonds, and bringing them onto the blockchain. This is something big institutions are really excited about. Then you have AI and blockchain, which is trying to merge two of the biggest tech trends on the planet. And finally, DePIN, or Decentralized Physical Infrastructure, which I think is fascinating. It uses crypto tokens as an incentive to get people to build out real-world networks, like Wi-Fi hotspots or data storage. So to make this a little more real for you, let's take a look at a fictional example on that RWA space, a project called Orochi Network. Think of it like a digital notary public. It can prove that a document, like a property title for a house, is totally authentic and accurate. But, and this is the key part, without revealing all the sensitive details of that title to the whole world. This kind of private, verifiable data is the essential plumbing you need to bring trillions of dollars of real-world assets safely onto the blockchain.
So as we start to bring all of this together, there's one central idea that's way more important than any single price target or prediction I could give you.
And this is it. In a market this chaotic, this uncertain, trying to be a perfect fortune teller is just a recipe for disaster. What really matters is having a clear process, knowing your own risk tolerance, having an allocation strategy, having a plan for how you'll buy and how you'll take profits. That is what will ultimately lead to success.
So, we'll leave you with this question. We've laid out the map, we've shown you the possible futures, and the strategies you can use to navigate them. The market is at a crossroads. The only thing that matters now is how will you prepare? Thanks for tuning in.